The Edgeless Horseman here is 5th of May 2022, and another volatile day in the markets. Broader markets are crashing and taking down the miners with them, and as well as junior miners. Gold and silver started way up, but are trading around neutral, I think. But again, it's like, market is certainly not rational as far as I can see at any point in time, really. So, when people are scared, they sell. And when people are greedy, they buy. And valuations or price, etc., that's an afterthought. That's not how people work. And, one good example of that is an article which I've showed before, title being Fidelity's Best Investors Are Dead. The customer account audit revealed that the best investors were either dead or inactive. Think about that for a minute. Most people would be better off if they shot themselves. That just shows just how bad of a decision maker most people are. And of course, the more decisions you make, if your average decision is bad, the more decisions you make, the worse your performance is gonna be. Because dead investors, they see neither opinions or hear opinions or feel or try to time the market, etc. So one could basically say that the only edge a dead investor has is being dead so they can't actively try to time the market. They buy once and don't sell. That's one edge. Which means that they don't bring in any emotions. Because they can't even, well, they're dead. They can't act on it. I mean, think about that. It's not that they're great market timers. They don't even try to time the market. Just the simple fact that they do nothing and are influenced by nothing allows them to beat the living. And on that point, I would just highlight what I think. I mean, I think one could see it as like three categories. Category one, act based on emotions and lose. That's 95% of people. Vast majority of people lose. They try to actively time the market. They are beaten by category two, which are dead people. No emotions, win by not losing. Just the fact that they don't try to time the market or are influenced by emotions allows them to beat the living. And then there's category three, which you should aspire to be, who take advantage of the fact that 95% of people act based on their emotions. So these win by not losing relative to these people, and these ones take advantage of these people. And like I had a discussion with a fellow mining investor recently, in the broader markets, there's a lot of funds, there's a lot of research, there's a lot of yada yada yada. There's a lot of, let's say, facts. You can see what a company earn, etc. So that will typically be more over analyzed because there's so much competition. And compare that to the junior sector, where right now, for example, during sentiment lows, there's almost no volume, and there's no funds that can really actively buy or sell in the open market. Okay, so that leaves retail investors. And given that this is, a sector centered around gold, which is, there's no fever like gold fever, and at the same time, it's extremely volatile. So, given that, one should conclude that this is probably one of the most sentiment driven sectors out there, the most emotionally driven sectors out there. Okay, so what would be the obvious conclusion for anyone who wants to beat the market? not primarily to have better research or due diligence than others, because again, especially since it's so volatile over the short and medium term, it makes more sense to actually just take advantage of the emotions, the volatility. So I started a post which I've not yet finished, but this is a draft. Uh, you know, if the again, if dead people, their edge is simply not having emotion and not timing the market, because that's what I see all the time, especially right now. And I've had this discussion with a lot of people who have been investing for a long time as well, who they cannot fathom uh, the fact that I don't care about the fact that sheep can get cheaper, nor they can't really fathom that being down 50% doesn't mean you're doing anything wrong. Because most people are short-sighted and emotional, and we'll get through most of these. Okay, how do you, beat or take advantage of this sector being emotional? I mean, first of all, to have a value investing approach, aka being a contrarian. But I mean, if you're a value investor, you automatically become contrarian. So I don't think it's, I mean, when you think about it, is it really contrarian to buy something when it's cheap? I mean, that's just common sense, really. But in the eyes of the masses, that looks like contrarianism, because most can't fathom how you can buy something that has gone down so much. They can't fathom how you can buy a sector that's, dead cold, basically. So that's again, I mean, you can do like dead people, don't be affected by it, but you can also, if you're active and want to beat the market, you can take advantage of it. And value investing is, in my opinion, a good approach. And I've been asked, okay, how do you know something is cheap, etc. I mean, you never really know. I mean, since we don't even know when a project is going to be a mine, if it ever becomes a mine, everything is like a trading sardine. But what we can know is that sentiment oscillates between greed and fear, and we know that ounces in the ground, even if it's the same project, might be valued at $80 per ounce at some point and $20 per ounce at another point, simply because there are changes in sentiment. So we can at least have an estimation of, is this bad or good sentiment? Are people fearful or greedy? I mean, to me, this is a no-brainer where we are right now. I mean, I've showed my sentiment indicator a bunch of times. I mean, it's a screaming buy. If your simple investing plan was buy low, sell high, or buy cheap, sell expensive, that it's been screaming buy for like 8 months or so. And that's also one thing that most people can't fathom. Like, how can you be bullish for 8 months, and increasingly so the more time passes, especially if price goes down? I mean, it makes total sense. First of all, the more time passes, the closer we inevitably get to the inevitable next sentiment high. And the cheaper it gets, the more obvious the buy on top of that. Because value is what you get, price is what you pay. And if nothing good is priced into the future, and nothing bad has happened, and you don't expect anything bad to happen, I mean, the risks are so overwhelmingly to the upside. And it's like, okay, what are some other edges we can, take advantage of? And we can't take advantage of the dead because they're dead. We can take advantage of the 95% who are actively trading and trying to time the market and yada yada yada, who end up losing, typically to the ones who actually, beat the market. What is the market? It's short-sighted. You see that all the time. Just look in any forum, etc. Just look at Twitter on the commentary. Okay, so they typically short-sighted and based on emotion. So basically, people, okay, I should have taken a better stock example, but it's like people feel based on recency biased. They see this, or they have experienced a downtrend, which clouds their judgment, and they start to fear that the next sentiment high will never come, and they just project it down. So okay, they let this influence their decisions at any point in time. Okay, how do you take advantage of that? Well, not factoring this in, not letting this cloud your judgment, because we know that the past is the past, it doesn't matter anymore, and we're all about the risk reward going into the future. So that's one edge, the ability to ignore what has happened. And another edge is, the short-sightedness of the market. The market typically prices in, let's say, a few months. I mean, what does the retail investor focus on? I would say it's like next news release, obviously as the results, etc. And we'll get to that. But typically the next 1-2 months, perhaps. Most people are actively hunting 10 baggers and they want to get them tomorrow. I mean, I've talked about this over and over. It's like, how do you take advantage of the fact that Mr. Market, the marginal investor, looks a couple months ahead, max, let's say? Well, looking further beyond that, of course. If you have an idea what will happen at 6 months from now or 12 months from now, what your base case is, and you compare that to the price where we're at right now, when the market is pricing in this future. And typically, if it's in a downtrend, it's influenced by the downtrend, so it will project, worse future just based on trend following, momentum trading. Well, okay, if you think, future probably pretty good, maybe, you expect a company to increase their ounces in the ground by 50 or 100% within 1-2 years or whatever. Obviously, that's a net positive to the company. Okay, and if you don't think that's reflected in the price today, because people don't price a stock based on a year from now what could have happened. No, they price what they think will happen tomorrow or next week, and again, typically they project the price action. Okay, that's obviously one edge. Just look farther ahead. If the market is letting this influence them and focusing on this time period, ignore this and focus on this time period. Obvious edge, common sense. Okay. What is the market as well? Greedy, especially in this sector. Okay, what does that mean? I mean, typically, especially not perhaps at extreme sentiment bottoms, but a lot of the time there's drill hype going into assay results. People, because most want to get rich tomorrow, as we get closer to the period of an exciting play coming out with assays, excitement will ramp up. People will feel, well, okay, now there's only perhaps 2 weeks until I can get rich tomorrow, which never happens, but that's how people think. So you could trade that drill hype thing and maybe sell into assay results, de-risk, etc. And buy when it's boring, buy when we're 6 months away from drilling an exciting target. And sell when we're, 2 weeks from expected assays. Stuff like that. I mean, obvious edge, that people work that way. Fearful. Buying into fear, playing offense when majority are playing defense. And that's times like this. People say people repeat the saying, buy low, sell high. What they actually do in reality is sell low because it can always go lower, and buy high because it can always go higher. Story all this time. Gonna happen at every bottom here. People sold because they felt it was gonna go lower. And here we buy because we feel it's gonna go higher. Just do the opposite of that. Pretty clear. I mean, that's another edge. I mean, the more edges you can play, or the more tools you apply to your tool belt, I mean, that's edge stacking basically. So again, if you're dead and don't time the market at all, you have an edge versus everybody else. But if you take advantage of the human mind, human psychology, and turn it against them, basically you weaponize the very thing that 95% fall to against them. You do the exact opposite. I mean, that's what, poker, whatever. I mean, how do you form a battle plan, let's say, or how to beat the market? It's like, okay, especially in an emotionally driven market, identify what people do And then the next step is, how do I take advantage of the fact that people do this? And again, dead people just win relative to living by not losing, not doing the mistakes that 95% of the living does. But if you want to really beat the market, you not only not make the mistakes, you take advantage of the mistakes. You use it against them. You use the human mind against itself. And obviously, again, fearful. What do I see all the time now? People fearing that, I'm afraid the market is gonna crash and take down miners with them. So what? Is the mining sector gonna go away forever? Is a company that falls to a enterprise value of 0. Let's say every junior out there fell to an enterprise value of 0. How are you gonna lose in that environment? The only option would be pretty much that the mining sector disappeared in the future. Okay, so that means the end of civilization. And in that case, it doesn't matter what you owned anyway. Because if the mining sector is done, we don't have a civilization, we don't have any iPhones or whatever. So that's like a moot point. That's just fear-mongering that you tell yourself and try to justify the fact that you want to sell because it's emotional. You start to make excuses for irrational behavior. Narrow-mindedness. Okay, yeah, the market is narrow-minded. Why do the Lundin spin out projects all the time? Because they know that Mr. Market, the marginal investor, can only focus on one thing at any point in time. So if you have a case, let's say, or a company where there's multiple assets or projects or targets, whatever, and you see, hey, I mean, it's just priced based on, the flagship asset or whatever, and you think, well, there's a chance that they can monetize, project or target X, Y, Z or whatever. I mean, that's also an edge. If you can see stuff happening that's not being priced in by the market, I mean, that's free kicks at the can. If you have one company with one target and it's priced based on that target, then you have another company with 5 targets and it's pretty much priced like it has one target because the market only focuses on the flagship target. So you have 4 additional shots at actually, company drilling a discovery hole, let's say. That's such an obvious edge, exponential edge versus the single target company. With that said, you have to be aware that it's like if there's no way to monetize the additional projects or targets or whatever, it of course becomes harder. In that case, the market can stay ignorant for a long time because there's nothing perhaps that forces it to start being rational. So that's one thing, obviously, but that's like, aces in the sleeve, free upside. So it's not really a problem, let's say, but the reward is more iffy in that case. I mean, the opportunity arbitrage. Confusing risk with uncertainty. Again, I mean, that's what you see all the time. People see a decline in price as risk. That, I can't be down. If price declines from here, from where I bought the stock, that's risk. I can't take that risk. Or even better, it's like when something is so cheap, and then people justify the cheapness with, there's nothing proven here. You can't guarantee that X or Y or Z will happen. But I mean, if there's like 99% chance priced in that the future scenario is negative, for example, I mean, then you're not taking risk. Maybe the chance of success is 30. So I mean, there's certainly uncertainty, but that's not risk. It's like if I could buy an endless amount of lottery tickets for free, the results would be highly uncertain, but there would be 0 risk because I didn't pay anything for it. But people confuse it all the time, and then they basically try to justify their emotions that they're fearful with, like, oh, you can't guarantee this or that. It's like, yeah, risk and uncertainty are not the same thing. Risk to me is overpaying for something that should go down and stay down. That's it. That's simply that. Risk is not buying something, and since every stock can go down in price, that's like, yeah, well, okay, that's a lot of risk. I mean, in that case, it's like now in the juniors. The juniors have most, or a lot of juniors have already crashed. But now people are still worrying about a crash. And if it crashes more, they'll worry about the next crash. I mean, it makes no sense. Sure, they can go down in price, but are going to stay down there. It's like, a good example perhaps, about this. Let's say you bought here. You bought here. You see price declines, price declines, price declines. Down here, you're afraid of it, crashing more. So you sell. You sell here. Yeah, okay, you took a paper loss, went into a permanent loss. Instead, another person's like, yeah, well, this is just going to be temporary because, the price levels are unsustainably low. So he just sticks it out. And no, let's say he sells here or sells here, whatever. Was this wrong? Was this a bad buy? For all this period of time, people are going to point to that and say that was a bad buy because he was sitting in a paper loss. Meanwhile, if he didn't act on that or believe those people and realize, Jesus, it's even cheaper now. It's just getting cheaper. And he buys all the way down. He understands that. He doesn't know when the bottom is in. He just knows that these prices are ridiculous. Buys all the way down, sits with it. He might be sitting in a pretty fat profit here already. He would definitely be sitting in a fat profit here because all buys would be in the green. It's like, I have no idea, and that's what a dead person wouldn't. A dead person would sit here and hold it to here, and obviously be in the green. Most people will. 95% of people have not beaten the GDXJ. But it's like, I never know when the bottom is in. I'm stock picking all the time. Maybe I buy here, and it's like, okay, I'm looking, my results on paper from the top here looks atrocious, down 50%. And that's over, it's like, yeah, that's over. Oh, jeez. Yeah, wrong. $826 days of looking wrong and minus 50%. Most people say, better sell out. And typically people sell later and later. The longer the correction goes on, the more price goes down. People are more and more likely to sell, whereas the selling increases in cost exponentially so. When the correction has gone on for 825 days and price at a low, that would be the best buy, because we always know that we're going to hit a sentiment high. But that's completely the opposite of how people think. Most people cannot understand how I can say it's been cheap now for again, I don't buy the GDXJ. I don't know if this is actually cheap, but it's like, the junior sector overall, because it has been incredibly cheap. And if you look at the gap to miners and gold, it's, largest gap ever. I have no idea when the low is gonna come. It might be down here. This might be the low. This might be the low. This might be the low. It might continue for I don't know how many years. What I do know is that we're going to hit a sentiment high again. So regardless of the way it takes, I'm 100% sure that I'm buying something that's cheap right now. And on average, my stories will pay off. And I have no idea what way it takes. And that doesn't matter. Because you can control that, that's unknowable, so it doesn't matter. The only thing that I know that we will hit a sentiment high. And given that a lot of juniors have gone down 70% from sentiment high to sentiment bottom, typically on, again, mostly sentiment. That means they can very well go up 200% on mostly sentiment. And that's what happened many times before. I was in Bear Creek Mining, from this bottom went up 500-600%. So again, I thought I bought low, which I did in, I don't know, it was actually around August perhaps. So I mean, if you ask anyone in hindsight, was this, did I start buying low? For sure, 100% would agree with that, because they seen what happened afterwards. But until then, when it went down 45 or 50%, most people would have said, I made a mistake. And most people are dumb. So I know that the lower it went, the higher it's going to go in the future. And then it happened. And as you can see, I mean, the rallies, etc., tend to be more compacted in time versus the grinding bottoms. And then Rocket, from this level here, that just took, what is this, August? Yeah, it's like 5 months. It went from this level to this in 5 months. And you had all the opportunity in the world to sell before that. You could sell all the way down here. You could sell all the way down here, and you missed that. Envy, I missed the boat. I mean, another one, I've talked about this before, that, people tend to, including myself, when you see a stock going up on a discovery hole, you feel like you missed the boat, and that's why we tend to not jump on board opportunities when the story got like a lot better, but price went up, say 50 to 100%, but the story actually went up to 300% in expected value, but we refuse to jump in because we see people already sharing and we don't want to be late to the party, etc. And that's also why typically when you have movements like this, I mean, most people will wait until, quote, the coast is clear, and they'll start buying here. And I've talked about this before. The only way to rectify buying high, buying when valuations are high, sentiment, it doesn't get better if you sell low. I mean, that's the opposite of it, obviously. So it's like, it doesn't matter what has happened. It doesn't matter if you're down 80%, 50%, 60%, 30%, 90%. It doesn't get fixed by starting to do stupid decisions. And for the people like who sell, most people actually believe that you can't have a 50% paper loss and do well. That for sure you made a mistake. Well, I've had, like I've shown before, I've had several 50+% corrections and 30% corrections and 20% correction. And if you look at from, like, I think this might have been around where I started buying, perhaps, 26 bagger, not bad. If you look at the bottom, 58 bagger. And still I had to endure all this in between. And this one I like. I remember this quote, and I googled it from the Reddit threads, like, Charlie Munger said, if you can't stomach 50% declines in your investment, you will get the mediocre returns you deserve. And of course, some nitwits like, this makes absolutely no sense. And then he went on to, justify his position. And this is also just another example. It's like I asked, why does dead people have an edge? Because dead people can't panic, sell, or overtrade. Bingo. And he obviously knows that. When he thinks about that, he knows that. But the hardest thing is not... I mean, that should be obvious now. The hardest thing is not to know what to do. The hardest thing is doing the right thing. Or not doing anything at all. Because Aaron knows this. But the hardest thing is to actually follow through on it. So if your simple strategy is buy low, sell high, there's no way you can say that this isn't low. Especially if you look in the junior sector. They're more like down here. So it's like 100% obvious what you should do, and still people can't, go through with it, because they fear that cheap can get cheaper, And they firmly believe that if you're sitting at a paper loss at any given point in time, that was a bad decision. No, the bad decision was this was a good buy depending on how long you stuck out or stuck with it. The bad decision would be sitting on a paper loss and selling because you would miss this. Same here. If you bought here and you sold here, you missed that. It's like we have no idea when it's gonna head higher. We only know that it will head higher unless the mining sector is gone. And if the mining sector is gone, that means civilization is gone, and then it doesn't matter how many dollars you have anyway. So I'm getting frustrated just seeing the same stuff all over again. Every day we have a down day, same stuff bubbles up, and people are gonna justify knowing what to do but not following through with it. It's like another thing. It's like I see people give advice all the time, and since 95% of people does not beat an index, most people like this guy here, despite this fact, he happily shares his moronic conclusions with everyone. So assuming we see or hear 200 opinions per day, let's say you scroll through Twitter, 190 of those opinions you are bombarded with will be garbage opinions in practice. They will probably think that, everybody thinks that what they say when they give advice is like the right thing, but I swear to God, vast majority of all opinions I see, I'm like 99% sure they come from people that have no clue about how they beat the market. Some of the best investors I know, they're fairly quiet. But there's, most people, including me, I'm out there all the time because like right now, for example, all the bulls are pretty much quiet. All the gold bulls are quiet, all the mining bulls, they feel ashamed or whatever. It doesn't look good. You've been bullish for like last 2 years. So, I get that in a way, but that's what I feel even more responsibility to be one of the, the lighthouse in the storm. It's like to just hammer home, because I know that I beat the market. And if I'm either very smart about it or I've been extremely lucky. But I think most of what I say makes total sense. And I expect to continue to absolutely tear this market apart. And that entails absolutely not selling any lows. And that's why I'm buying and buying and buying. And I'll buy if it goes lower. I'll buy if it trades sideways. I'll buy good stories on any given day, regardless if they're up or down. Because I look to the future. And I expect to be down 50% a lot of times over my investing career, because I don't time the market. But when we bottomed, I typically go up a lot more. And when you compound it, it can have massive returns. But if I sold at any point in time during these bottoms, if I threw in the towel because I couldn't stomach, as per Charlie Munger, if you can't stomach 50% declines, no way I would have these results. No way in hell. Because I would be selling when the future expected returns would be absolutely, ballistic. Let's say. Just 2015 July and 1st of January. Look at the difference in returns. I would be giving away, like I've said before, over 2,500%, 20 bagger if I sold the lows. Jesus Christ, that would be costly. So if you think I'm even remotely thinking of selling when juniors are this cheap, you are out of your goddamn mind. And a dead person certainly wouldn't. The 95% who try to time the market certainly would, because they do it all the time. Yeah, so again, it's like most of the opinions you see, I get frustrated just looking at Twitter because there's so incredible amount of garbage advice going around. Because again, people cannot fathom that you don't try to time the market. And people can't fathom that you can have a 50% paper loss at any given time. There's a bunch of stuff people cannot fathom. And still they can't, explain why am I not beating the market? Why is a dead person beating my portfolio? Again, if you want to be in category 3, that means not only will you have to ignore your emotions and have the patience like a dead person, if you want to improve on that, you will have to take advantage of all the other people's mistakes. And it's like the hodl portfolios I manage, they're up maybe, 140, 150% over the last 3 years or whatever. Very diversified nowadays. I mean, that might not sound like much, 140, 150% returns, but those are really great compounding results. So that's basically, the strategy in that is basically what a dead person would do if he started off by, on average picking above high, average quality stocks. Because I don't do much of trading in those. My smaller active portfolio, which I, kind of play around with, yeah, I'm gonna have even better results because I do this. But the hodl portfolios are category 2. Not doing anything and just hodling primarily growth stocks with low, with some margin of safety and diversified. But this portfolio here is category 3. And most of my stocks are, most of my shareholdings are in private placements, yada yada. So I'm actually, most of my money is in category 2, not doing anything. But now and then I do shuffle around, and in my active portfolio, which I just use to keep myself, occupied, let's say, while we wait for, the next sentiment high, I'm taking advantage of all of this stuff. I'm using what everybody does against them. I do the exact opposite. So again, I'm not gonna do a video like this every goddamn day. The price of juniors are down, whatever. Because I think I should have hammered home so many of these concepts right now. That it's like, if you don't get it by now, if you've seen a bunch of these videos, you will probably, I'm sorry to say, you will probably never get it in that case. But it's up to you. It is 100% up to you to stick with a game plan, to help yourself to have better returns. I'm not your portfolio manager. I can't hold your hand at every point in time. But once you grasp these concepts, and these are other concepts, like, if you want to hodl, exceptional management is obviously great, because on average, the more time you give them, they will, solve problems. Poor management will destroy and cause problems, destroy value and cause problems. And this one, obviously, a big thing. It's like, this is the share price action people dream about. Just a straight shot higher. But from a return perspective, this is exponentially better than this. Because if you buy monthly all the time, if you buy every goddamn, let's say you have a trend line like this, these lows here are gonna supercharge your returns. Doesn't matter if you bought all the way up, but if you'd have a straight line, you would be paying higher and higher prices all the time. But if you have these kind of actions in between, these buys during the lows, they're gonna. That's why I kept buying and buying and buying, because they're gonna absolutely supercharge your returns once they go higher. Because let's say, in the junior space right now, let's say the forward expected return is 200% within 3 years. So every dollar you invest now, diversified, etc., it's going to have 200% returns. And if you bought here it would have, I don't know, 60% returns, whatever. Of course you're going to be buying like crazy at every low, as long as the stores are intact, etc. And this sentiment thing, I mean, again, if you're just in the business of buying low, selling high, what on earth are you doing thinking of selling right now? I mean, it literally can't get much lower. And if it goes lower, that's just going to be temporary anyway. And still people are going to buy here, see this and think they made a mistake, so I better sell or whatever. Whereas the people who understand that it's inevitably going to go higher, they're just, wow, okay. I mean, if I'm going to have a 200% return here, I'm going to get 500% return here when it turns around, and whoops, it turned. And like always happens, whoops, it turns. And people are still, even though this happens all the time, over and over again, people are going to believe that this downtrend will continue forever. It won't. You should be thinking about how much you're going to make when its sentiment turns higher. And of course, try to pick good companies that don't dilute the shit out of you before it turns higher. Cashed up access to capital, legit projects, etc. I mean, that's like a prerequisite to have really, good returns. I mean, you have to pick the good companies as well. It's like, yeah, you can't trade Bear Creek Mining or many trading sardines, but then you have to time. A dead person who owns a trading sardine gets nowhere, because you're back to the levels that were seen in 2015, 2014. But a growth stock will typically at least have higher highs and higher lows. Yeah, I think again, it's like, let's just recap with this. I mean, always think about this. Try to stack your edges. What is everybody thinking? How does everybody work? It's like, okay, how can I take advantage of the fact that people are greedy? Okay, I'll buy when they're not greedy, sell to them when they are greedy, or have something to be greedy about, like a future catalyst coming closer in time. When the future that they're not pricing in inevitably becomes the short term. So again, if an exciting project is going to be drilled in 6 months and you buy it when it's absolutely boring, and all of a sudden fast forward 5 months, then people are going to get greedy because they can finally see that catalyst. And just a bunch of other stuff. I mean, you obviously, the better returns you want to have, the more tools or psychological edges, etc., you want to weaponize against Mr. Market, the marginal investor. And it should be quite comforting to know that if you just did nothing except hodling, let's say above average quality stocks, you're gonna beat most people, and hopefully you'll even beat the dead. But the more you act based on emotions and try to time, etc., the market, you're going to be underperforming versus a dead guy. I mean, I think that's something to think about, because most people make irrational decisions based on emotions. So the more actions you take, if you are said person, the worse your returns are going to be. So you would probably do yourself a service by picking 20 high quality juniors and, again, like throwing away the key to your portfolio for 2 years, and you're gonna outperform 95% of people. But you can, again, be a bit active and actually weaponize the weaknesses of people against them and try to actively have some, even better returns. But my point is that you can win versus the majority by simply pretty much doing absolutely nothing. The less you do, on average, the better. Consider me biased if I've talked about any stocks. Assume every stock is a sponsor in that case. Make up your own mind. I cannot guarantee, loss or success, etc. I don't share your profits or your losses. I'm trying to tell you what has worked very well for me and what I think should work very well in the future. Regardless of how long this correction takes. Thanks for listening. Bye.